altcoins are basically in free fall, dropping off a cliff yet again, with a lot of traders getting caught on the wrong side of the move. So today we are going to flip the usual order. We are starting with the news analysis first because right now the chart is reacting to politics, war risk, and global uncertainty more than any indicator. We will break down the biggest headlines driving this move, what they mean for risk assets, and why is hedging crypto so hard. And after that, we'll get into the Bitcoin technical analysis like we always do, key levels, trend structure, and what to watch next. So let's get into the first news I prepared. So Donald Trump, what we've got here. So Donald Trump sets 8 European nations face tariffs rising to 25% if Greenland isn't sold to the US. So Donald J. Trump is now threatening, and unless they agree to a complete and total purchase of Greenland by the United States. Donald Trump actually posted on Truth Social. Well, can we show the screen to the viewers a little bit? So Donald Trump is actually showing on Truth Social. He posted this 3 days ago. The US will impose a 10% tariff on goods coming from 8 European countries starting 1st of February. Well, looks like the screen is not working, so what I have to do is to reload yet again. So give me a sec because this always happens during the live stream. So well, let me do it again. So guys, please bear with me. Just trying to share the screen of what Donald J. Trump is saying yet again. So you should be seeing it right now. So Donald Trump posted on Truth Social that the US will impose 10% tariff on goods coming from 8 European countries starting on 1st of February. And he didn't just stop there. He said those tariffs would jump even higher, up to 25% starting on 1st of June, unless a deal is reached for the US to buy Greenland. So this is a long post by Donald Trump on Truth Social. If you guys are interested, you can read it through. But like Donald Trump is taking so much pride for this because he's saying none of the US president in the past has managed to purchase or close the deal with the United States, but only there's a chance under the presidency of Donald Trump to actually have Greenland under the United States, because in the past, Denmark was always a roadblock to stop the deal from happening. So yes, Greenland is now being linked directly to tariffs, trade, and global markets. So why Greenland is even in the story? This is a question that everyone is asking. So Trump has been talking about Greenland for years, like during his first presidency, but now he's treating it like so-called national security issue. Like his argument is quite simple. Greenland is in the Arctic. So here we have the world 3D map. Yes, again, this is of course the United States. And here we have Canada, and all the way up in the Arctic, here we have Greenland. And Greenland is kind of between the United States or maybe Canada, and also Russia is just right here. Here we have Moscow. So what the US is saying is, okay, it's a good idea to have to have Greenland under control so that they could watch over what Russia and China are doing on the other parts of the world. So this is only one of the reasons. Second reason is the Arctic is becoming a bigger battlefield between the US, Russia, and China. Many countries are doing a lot of activities around the North. So what they're doing in recent years, Russia has expanded its naval presence, deployed missile systems, and ramp up weapons testing in the Arctic. At the same time, China has deployed vessels capable of serving both military surveillance and research functions in the region. The purpose are to collect data and secure access to resources and shipping lanes which are emerging as a result of melting ice. So point being, Denmark is still kind of like controlling Greenland, but since the ice is melting and a lot of countries are eyeing on Arctic, and they seem to think there is many natural resources underneath those ice. So Donald Trump say if America doesn't control Greenland, someone else would gain influence there, and that could impact military positioning, shipping routes, and rare earth minerals, which are key for AI chips and defense systems. So, in Donald Trump's view, this isn't a real estate deal. This is about power. So, obviously, going back to the tariffs that Donald Trump mentioned on his Truth Social, obviously the tariffs are aiming at Denmark and 7 other European countries that have supported Denmark or pushed back against US pressure. So if you guys are interested, like Denmark, Norway, Sweden, France, Germany, the UK, Netherlands, and Finland, so those are the 8 countries, will be charged a 10% tariff on any or all goods sent to the United States. And if there's still no deal, of course, the tariff rate going to increase. So these countries have seen as standing together against the idea of the US taking over Greenland. And Donald Trump is now using trade pressure to push back. Of course, Europe is not taking it very, very good. And I call it unacceptable. Like the response from Europe's side, it has been quite sharp. European leaders have called this move unacceptable and even blackmail. They say this is not normal diplomacy, and they are warning it could trigger a dangerous fight between the US and Europe economically and politically. The EU is already talking about retaliation, and here's the part makes markets so nervous and also care about. The EU is now discussing potential retaliation tariffs. These could hit American exports, possibly worth up to 93 billion euros. And that is, of course, not a small number. EU leaders also held emergency meetings and they are preparing a response plan fast. There's also an EU summit coming soon where Europe is expected to decide how hard they push back. So, question everyone is asking right now, is this even legal for Donald Trump to place tariffs whenever he wants and just like post on Truth Social? Well, can Donald Trump actually impose these tariffs without Congress? The legal answer is it's actually unclear. Donald Trump may try to use emergency powers, something called the International Emergency Economic Powers Act. So that law gives US President a lot of power during national emergency. But here's the catch. The US Supreme Court is already refuting Donald Trump's use of emergency powers for tariffs from the past. So this could turn into a legal battle inside the US as well, meaning if Donald Trump announces it, it might be that easy to enforce. It might not be that easy to enforce. So even before tariffs actually happened, of course, the markets were reacting to the threat, especially crypto, because tariffs create uncertainty and the markets don't like uncertainty. Tariffs could hit trade, supply chains, inflation, business confidence. So if Europe responds with their own tariffs, this becomes a full trade fight. It's not just a headline title. That's why what we've seen so far, it definitely more market volatility and pressure on currencies like the euro. So the key takeaway for this news, let's wrap it up clearly. Donald Trump is using tariffs as leverage. Europe is calling it blackmail, and the issue at the center is Greenland, a place most people never thought would become a global power flashpoint. If this escalates, it could shake trade or markets and the global ally system. And if it cools down, it will still show one thing loud and clear. In 2026, geopolitics is driving the market just as much as the charts are, and we're keeping this on track step by step. Just to build onto that pressure for that geopolitics, second news that we've got for today's show is NATO could now be put to the test, but not by Donald Trump, by Russia. And Estonia is now being named as the top risk. Like the fear here is if Russia can't get a clean win on the battlefield, Putin could try something even more dangerous, like a move against a small NATO country, just to see if the West would actually respond with anything at all. So question being, why Estonia? Like for those of you who don't know, let's actually pull up the map again. So here we have Russia, so Moscow is right here. And for Estonia, it's actually this small country right here. So it's part of NATO, it's part of Europe, just beneath Finland and above Latvia. So Estonia is actually a small NATO country, and is also one of the most vulnerable spots on the NATO map. It has a large Russian-speaking population, and Russia has historically claimed that some border areas are Russian land. One city that comes up a lot in these discussions is Narva, a border city that sits right beside Russia. The concern is not that Putin wants a full war with NATO. The concern is that he might try a small and strategic move, something big enough to scare Europe, but not so big that it instantly triggers a total war. So what this test could be, what it could look like. When experts talk about Putin targeting Estonia, it doesn't always mean tanks rolling into the capital. A NATO test, it could look like a major cyber attack shuts back power, airspace installations or dangerous military flyovers, create chaos, confusion, and fear. Even a limited attack on a small border area to see if NATO would hesitate. Because if NATO hesitate even once, then the message to the war is clear. It might be weaker than people thought. And that would be a strategic moment, a historic moment. Why this is connected to Ukraine? Because if we see any updates about Ukraine, let's actually go back to the news. It's kind of stuck. Like Ukraine is not, there isn't much developments coming out in terms of the escalation. Russia still controls a large chunk of Ukraine territory. Ukraine is fighting hard, but the war has become a long grind, focused on drones, artillery, and constant strikes. And after 4 years of war, the big fear is Putin may pressure to show progress to his people, to his inner circle, because he needs to keep up with his face, right? So if Ukraine becomes too costly, too slow, and too messy, Putin may look for other headlines, and NATO's weakest links become the obvious target. Another key reason this story is blowing up right now is the failed peace push. So President Trump has tried to move a peace plan in late 2025. The goal was to end the fighting and reduce America's role in Ukraine. But Russia has not accepted anything unless it's on Moscow's terms. They still want major territory concessions. They want Ukraine to be neutral, and they still want strict limits on Ukraine's military. So the talks have stalled, and that keeps the war alive. And as long as the war stays alive, the risk of escalation stays alive too. And tension, not to mention, is rising. And here's the part what's worry NATO officials the most. There have been more incidents near NATO territory, things like drone violation and airspace pressure, even if those events are small on paper, the message behind them can be huge. It's like Russia is testing the edges, and every time NATO responds slowly or argues internally or looks divided, that invites more pressure. And this is the big question markets and world leaders are watching, because NATO is built to be built on one promise. If one country is attacked, everyone responds. That's the whole point. But if Putin believes that allies is tired, divided, or distracted, maybe because of Donald Trump's whole approach with Greenland, Putin may believe he can create a crisis without triggering a full NATO war. And that's why analysts are calling Estonia a danger zone right now. So it's quite simple, the whole key takeaway for this news. Ukraine is still a war with no clean end. Peace talks are stuck. Russia is still pushing forward, and NATO is watching if the region more closely than ever. If Putin decides to test NATO in 2026, even in a small way, it could become the biggest geopolitical shock since the Ukraine invasion began. And the world will find out very quickly. Is NATO real, or is just a promise on paper? Anyways, we'll keep this on track on Roxom TV. And coming right next, we also have Canada just opened the door to Chinese EVs. But we will take a short break for now, and we'll dive into the details. See you in a bit.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to Roxom TV, and just to build up on that geopolitical tensions, we now have Canada versus US, because Canada just made a major pivot in global trade and it could shock the whole US. Canada has agreed to cut its massive 100% tariff on Chinese EV, and in return, China is giving Canada something it badly needs right now, a basically relief for farmers and cheaper exports into the Chinese market. So this deal is being described as EVs for canola, and the timing is no random stuff. So what is the whole EV for canola deal? So here's what happened 3 days ago. Canadian Prime Minister Mark Carney visited Beijing and announced a major new trade agreement with China. The headline move is simple. Canada is reducing its tariff on Chinese-made EVs from 100% down to 6.1%. That's a huge reversal, but Canada is still putting guardrails around it. The deal includes a quota, like at first, only 49,000 Chinese EVs per year can come into Canada. That number slowly would rise over time, reaching about 70,000 EVs over 5 years. That's still a small number compared to Canada's total car market. So, but it's a foot in the door. So why Canada is doing this? Because people can't afford full cars anymore. That's a problem in Canada. Car prices are high. EV prices are even higher, and Canada is behind on EV adoption. Right now, EVs are only around 10% to 12% of new car sales. So Canada wants cheaper EVs to boost adoption and hit climate goals. And here's a key detail in the deal. By 2030, more than half of the Chinese EVs allowed into Canada must be affordable models priced under 35,000 Canadian dollars. So that is a direct message to the market. Canada wants EV adoption, not luxury toys. And if we take a look at the figures here, where Canada is getting its EVs, this mainly there's a huge drop for the EVs imports, mainly because of the US tariffs, and Canada is trying to please US and bend over. So if we look at the chart, Canada imported just over 9,000 Chinese EVs in August 2024, just before Canada applied a 100% tariff. So there's a huge crash after the tariffs. And right now they're getting EVs from different countries, and US, Mexico, South Korea is on the rise, and also Germany, a little bit from Japan as well. But these numbers is looking to increase, especially for China. And right now they're removing 100% tariff to 6.1%. So that is a huge deal. But like, how does that canola oil get into the deal? So now let's talk about what China gives back. China is cutting down its retaliation tariffs on Canadian agriculture, especially canola, which is one of Canada's biggest export products. Canola seeds gets the tariff reduced sharply from around 84% down to about 15%. And China is also removing or suspending tariffs on other big items like canola meal, lobsters and crabs, peas, and more, basically agricultural exports. For Canadian farmers, this is a lifeline. China is a huge buyer of Canadian canola, and these tariffs have been crushing export income for years. So, of course, the US is not taking this very, very nicely. The US says Canada will regret decision to allow Chinese EVs into the market. And here's the real story behind. Canada did not just do this in a vacuum. In 2024, Canada followed the US and slammed Chinese EV with a 100% tariff. The reason was obvious. The US and Canada both fear Chinese EVs would flow into North America, would kill local jobs and undercut domestic automakers. But for now, Canada, especially the Canadian Prime Minister, he's shifting on his stance. What they're telling is Canada cannot rely on US forever. And that's because Canada sees the US under Trump kind of as unpredictable. Trump has threatened tariffs on Canada. He has pressured allies, and he talked about expanding Greenland and controlling resources, or maybe openly joking. I'm not sure if Donald Trump was joking, but like openly talk about, okay, Canada being the 51st state of the United States. So Canada right now is building leverage. This is Canada hedging his survival. And the deal is not only about EV imports. It also opens the door to bigger long-term cooperation. So between Canada and China, there's deals like around batteries or solar panels, energy storage, some critical minerals. China dominates many of these markets globally. Canada has the minerals and land and oil. China has the manufacturing and scale. So both sides want to work together, especially while the US is putting up trade wars. And there is also another angle of looking at this news. Now let's talk about what might be in the hidden driver here. Of course, it's oil. The US intervention in Venezuela changed the global energy chessboard. Venezuelan's oil is heavy crude, similar to Canadian oil sands, actually. So if US companies rebuild Venezuelan production, it can start competing directly with Canada's export into US refineries. That would weaken Canada's leverage. At the same time, China used to buy a lot of Venezuelan oil. So here, there's a small figure. Where were the Venezuelan crude oil exports going to? Of course, the first country that's sitting, well, that was back in 2023, but this is a reference. We could take a look. And China used to get 144 million barrels a year from Venezuela. The second one is US. But like that encounter, more than 68% of Venezuelan export of oil, like majority of that oil would go to China. That's why controlling or capturing Venezuelan president is making a lot of economic sense and political sense for Donald Trump. So if the US controls more of these flows after capturing Venezuelan's president, China would lose access to these oil. So China needs a new partner, need to basically find a new partner for these type of oils. And one way to fight back from China is to open a North American entry point through Canada, maybe using EVs or clean tech. So the final takeaway, let's wrap this clearly. Canada just made a deal that helps farmers get access back to Chinese demand, consumers get cheaper EVs, and the Prime Minister gets leverage against US pressure, and China would get a pathway into North America market. So it also creates a bigger risk. This could trigger a new fight with the United States, especially heading into the next USMCA trade review. So the real question is not just, is this good for Canada? The real question is Canada now quietly preparing for a future where the US is no longer a safe partner, but is its biggest threat? So this is a geopolitics news that keep developing, so we're going to keep a close eye on. But now let's move on to the AI. Because like, if you thought AI coding was already moving fast, this just took another level. So Vercel, the company behind Next.js, just launched something called Skills. And the simplest way to understand is it's like an app store, but for AI coding agents, or even better, it's like NPM, but for teaching AI how to code properly. So what is this Vercel Skills in one line? Vercel Skill is a new open source system that lets you install reusable skill packs into AI coding tools, so your AI can follow real best practices automatically. So think of it like, instead of writing long prompts like follow good React patterns, write clean code and accessibility, don't mess up performance, what you can do is just like, you can install a skill once, and the AI will behave better every single time. Right now, the AI coding world is kind of chaos. Like, you have tools like Claude Code or OpenAI Codex or Cursor, and more new AI agents, basically more agents coming out every single month. They can all code, but the quality is kind of inconsistent. Sometimes the code works, sometimes it's a security risk. So what Vercel is doing here is basically saying, stop repeating the same prompts every single day. Let's standardize good knowledge. So what is this like skill actually made of? Like, this is the smart part. A skill is not a new AI model. It's not training data. It's just a simple folder. Inside that folder is a file called skill.md, and that file contains clear instruction like a checklist. So how to clean React code, how to improve performance, and how to follow accessibility rules. So it's human readable and auditable, which means you can see exactly what rules that AI is following, and what skills, the skills do you get right now. Vercel launched a starter pack with 40 plus rules built from their experience that includes stuff like React and Next.js best practices, how to avoid performance mistakes, and how to build better UI and smarter workflows. They even have a skill that helps AI agent deploy to Vercel and generate preview links, so the AI doesn't just write code, it can just ship it. So in other words, this skill thing now is becoming a real ecosystem. So the site is called skillmp.com, basically a marketplace that indexes skills from GitHub, and it's already showing tens of thousands of skills. So the feature looks like this. You don't just ask AI to code. You install a package that teach AI your standards, like make my AI behave like a senior engineer, or make my AI follow company rules, or make my AI write secure code. This is why people are calling it a shift from prompt engineering to knowledge engineering. And this is also a big part of vibe coding. Let's take a step back. So vibe coding is when you build apps by just describing what you want. You're not writing code line by line. What you're saying is like things like this. Make a simple website with a login page and a dashboard. Then the AI would do everything for you. The problem is vibe coding often creates code that works, but it's not clean. So Vercel Skills is basically adding a missing layer. It gives AI taste, discipline, and structure. That means even beginners can build better apps without knowing what's like why it's better. So this is a big milestone for AI and AI coding. Vercel Skills is not just a new tool, it's a idea, like a new idea. AI agents are becoming software workers and they need training, but not in the model. They need training in the workflow. If this takes off, we are moving into a world where you don't hire a coder anymore, you hire an AI agent and that will install skills like plugins. And suddenly the agent acts like a pro, and that's a real story, and that's why it matters. Yeah, so we will take a short break for now, and coming back, we're also going to dive into what Yotsu, so Animoca's Yotsu, claimed that the moment of crypto is kind of gone because of Donald Trump. So stay with us because there's a lot more juicy news coming up.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
He's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back, everyone, and thanks for sticking with us. We are starting with a hot take coming from Yotsu, who is the chairman of Animoca. So the biggest shift in crypto right now isn't a chart pattern, it's the realization that the Trump pump narrative is fading fast. That's what Animoca chairman Yatsu said, like crypto's Trump moment is over, it's gone. And what he's really saying is that market needs to grow up. So what does he mean actually? Yatsu was talking at a CoinDesk in Hong Kong, and his point was simple. Yes, Donald Trump is pro-crypto, and that's good for sentiment, but crypto was acting like Trump was going to be the industry savior, and Yatsu said this was never realistic. Crypto is not Trump's top priority. So if the market pumped purely because of political hype, it makes sense we are seeing a correction right now. And this is basically the reality check phase. So here's the problem with the whole Trump trade. Markets started to price in, and it has been pricing in for months in terms of like easy regulation, instant pro-crypto laws or fast approvals and green light for altcoins. But policy takes time because right now we are delaying on the whole crypto structure bill. Committees would fight, lobbying kicks in, and banks push back. And suddenly the timeline all stretched out. And yet again, 2026 is the midterm year. So the hype gets ahead of reality. And that's how you get a pullback. Yatsu is saying, if your entire bull case depends on one politician, that's fragile. I hate to break it to you. Now, for Yatsu's view on Bitcoin is very traditional, but in a good way. He says Bitcoin functions like gold, is a reserve asset, meaning if altcoins rotate, narratives change, or meme coins crash, Bitcoin still sits at the center of the entire system. Is the asset people run to when uncertainty returns. So the big feature there is, of course, AI and crypto. It's also the real story here. This is the part where it gets important. Yatsu said something very interesting. So for most users, the hedge toward AI is owning crypto. And the idea is that crypto is the natural asset class for AI agents. What it means in simple terms. So if AI becomes everywhere, you still need a system for ownership, payments, identity, rules, and trust. And since that we were talking about how AI, vibe coding, and AI agents, very likely we are moving to a world where AI agents would trade with each other instead of trading with humans. So maybe an AI agent specialized in designing some thumbnail, or another AI agent specialized in writing the script. What we could foresee in the future is that maybe perhaps these AI agents would talk to each other and exchange payments. Very likely is going to be in crypto. So crypto is designed for that. So instead of crypto stat, what Yatsu was saying is crypto becomes infrastructure for the AI era. Another big quote from him, crypto is basically gamified finance. And he's not saying that as an insult. What he's saying is that people love rewards or competition, social trading. That's why platforms like Hyperliquid got so much attention. It feels like part trading app, part social game, and part online community. And that's why crypto moves faster than TradFi. So the key message from Yatsu, he's saying that industry now has to shift from political pump to real structure. And what it means by real structure is like real regulation that actually pass instead of just hype or talk. Institutional money that stays long term. Real utility, not just speculation, because we know 99% of a lot of crypto projects are scams, and products that normal people can use. It's not just selling a fictional idea, because nobody says e-commerce anymore. They just say it's commerce. And he believes crypto is heading the same way. And on the surface, what he mentioned here, like Trump moment is over, it sounds negative, but it can actually be bullish long term because hype cycles don't build real industries. Infrastructure does. So if this cycle becomes less emotional, less political, and more based on adoption, that's when crypto becomes permanent. And since that this interview was in Hong Kong, and here's the key point that he mentioned as well. When the US becomes unpredictable, Hong Kong looks a lot more stable. We have clearer rules, more licensing frameworks, and more global rails. So as the market moves from hype to structure, Hong Kong could be a serious base for builders after all. Maybe I'm just shilling for Hong Kong. Well, anyway, so this is one of the talks during the whole CoinDesk interview. Let's actually get into the Bitcoin's price action for now, because we still haven't talked about the instant reaction of all these geopolitics moves that is shaking up the market. So one thing that on the daily chart, so starting on the shorter time frame, one thing about Bitcoin is that we thought we have this ascending triangle. So basically, whenever Bitcoin touched around 94K, we kind of got rejected, like for once, twice, and 3 times. And the 4th time, we actually broke above that. So this is, of course, like if it were a ascending triangle, this is a bullish setup. So if we take the width of that, like we could very likely go to like 105K, somewhere around there. But like point being, looks like this pattern got rejected yet again because volume is not supporting it and people got basically got wrecked. So this is looking more like a I would say a bear flags after all. So what it means, so zooming out, looks like whenever we touch the resistance here, we got rejected, and then we have a building support around here, so 84K, and then whenever we drop to 84K, Bitcoin happens to find strong support. And this is, of course, if this is a bear flag, this is a bearish pattern after all. So this is one thing, like I mentioned in the last show on Friday, if we end up getting rejected at 94K, which we did, like wicking, okay, so here we broke above that. That was back in 13th of January. And we pumped all the way to above 97K, reaching 98K. The problem is okay, wicking is fine. So there are 2 candles. That means just briefly dropping on a daily candle below 94K. But the problem is we actually closed below 94K. So this is concerning. This makes the whole ascending pattern invalid. So we could forget everything. So another bearish signal I'm seeing from the daily time frame is this: we are dropping below the hour size support. This is again a very bearish setup. So what we are seeing right now, zooming out, looks like Bitcoin just like a consolidating sideways action, just trading between 84K to 94K. So basically a very, very easy, so $10,000 difference, just like trading within this box. If we lose 84K, so right here, it becomes very, very concerning for me. We could drop all the way to 77K. So I will set up, like personally what I'm doing, of course, not financial advice, I will set up some buy orders around 77K. Though I still don't think it could be the absolute cycle bottom. Like I'll get into that right now. So for the daily candles, like we know the immediate price action, like shorter time frame, is quite bearish after losing that 94,000 as the support and resistance. And in terms of the weekly, because like a lot of people are asking me, how low could we go? Like right now, let's pull up the Ichimoku out. Like I've talked about us being in a bear market like since November, so it has been months, but like people still like to disagree and argue, but that's fine because that's what makes us basically stay clear in the head. So, all right. So for the Ichimoku cloud, this is a leading indicator that I like to use, and we know that in January, it's very likely we're gonna end up with a positive number. The reason why I would say this is because if we go to the Bitcoin's monthly return in the past, okay, October, November, December, back in 2025, we had 3 consecutive red months. So the pattern that Bitcoin has been following is that okay, if we have 3 red months, usually the 4th month is going to be green, and it only happens like 6 times in the whole Bitcoin history. So believe it or not, I'll leave that for you to decide. Okay, so this is reason number 1. Reason number 2, why I think it's going to have end up with a positive number. It doesn't have to be huge because right now it's plus 5%. It doesn't have to be a huge number, but like end up having a green number. So it could be like 0.01%, but like it's still going to be a green month, if you get what I mean. Okay, so going back to the Bitcoin weekly chart, second reason why I think there's going to be a pump until mid-February is because the pattern that we follow for the Ichimoku cloud, last time we stayed inside the cloud for like 3 months, close to 100 days. So if the same thing gonna happen, of course, history doesn't repeat, but it often rhymes. That is a rough number we could take reference to. I'm not saying that would definitely happen. So we could have some pump, like all the way. Maybe the pump has already happened, like that was 97K. But like technically speaking, it was still within this Ichimoku cloud. So if we stretch that out, like 90 something days, it will take us to mid-February. So that is the another cycle, another phase that I'm watching. So here, this is the first phase of bear market, and since we have this like run up to 90, close to 98K, and maybe there's more room for some immediate price action. When it comes to immediate, I'm talking about like in the coming a week or 2. Okay, and then maybe in the coming weeks we're going to have some more positivity according to the last cycle, because like last cycle we actually rally all the way up to the to the 50-week moving average. So let me clear the drawings. So last cycle we technically we're still inside the Ichimoku cloud. So we have this like sorry, it's not this one, so many indicators. So we inside this Ichimoku cloud, we pump to the top band of the Ichimoku cloud, and then we actually rally all the way up to the 50-week moving average. So being right here, it happened in March 2022. We pump all the way up to 46K, 46.6K, and we end up closing a weekly candle above that. So people were really over the moon, but only to find out, like zooming out, of course, we know that in hindsight, this apparently, it was just a second phase of a bear market. So we have the first phase, and then the second phase, and then down to the 200-week moving average. Last cycle back in 2022, we actually dipped below the 200-week moving average. So the 200-week is a general reference we could look at, because like this is the general rule of thumb. If Bitcoin have a 2 consecutive weekly candles below the 50 weeks, so right here, the blue line, then we eventually gonna go to the red line over here, so being the 200-week moving average. So this one slowly gonna catch up. Since we are only entering the second stage and about to get into the third stage, so the 200-week gonna slowly catch up, and then perhaps we're gonna see a bottom at around 6th of October 2026. So by the time, let's see how high the 200-week would get up to. Maybe we're gonna get to somewhere around 65K, just like a general reference we could look at. Right now, the 200-week is sitting at 57K, but it doesn't have to be like, we don't have to find 200 week as the bottom, because like there were instances in the past that we were just like barely trading above the 200 week moving average. Like last cycle, it was just very extreme because there was so much bearishness, like FTX and all this like Silvergate and 3AC. It was a very terrible time and very scary time to enter, and especially for altcoins like Solana. It was trading at like $8 or something. So entering during that time is very scary, but like we know that for Bitcoin it's always going to bounce back. It's difficult to say for a lot of altcoins, but like if you purchase the bigger option like Solana, not financial advice, like in the long haul, it's going to be all right. All right, so that is the quick rundown on the whole Bitcoin TA. Let's actually move on to like good news that I'm spotting here. Here we have a headline. So let's zoom out a little bit. The title is a little bit big. So large Bitcoin holders just bought the most BTC since the FTX collapse in 2022. And if you remember what happened after FTX, that was the bottom of the entire cycle. So question we're asking here, is this the real deal? So according to the CoinDesk, so to the graph here, Bitcoin's fish to shark group, meaning wallets holding 10 to 1,000 BTC have been on a buying spree. So over the past 30 days, this group added around 110,000 BTC. That is the biggest monthly buying wave from this group since November 2022, right after FTX collapse, when Bitcoin crashed to around $15,000 and everyone thought crypto was finished. So today, Bitcoin is trading around 93K, and while price has not been making new highs, this group has quietly stacking anyways. So who are these fish to sharks, and why do we care? Because this is not your average retail buyer putting $100 in. This group usually includes high net worth investors, crypto funds, and trading desks, so early adopters. So when this group starts accumulating heavily, it often means one thing. Smart money is treating this price range like an opportunity, not so much as a risk. So now where it gets interesting as well, because you could be like, oh, it's only the whales doing what they only know best, like buying the dips, because like they have so much money. So if they caught every single dip, then they're not going to run out of money like us retails do. But here's where it gets interesting. This is not only for whales. The stream group, meaning people holding less than 1 BTC, also bought around 13,000 BTC in the same 30-day period. That's the biggest accumulation trend since late 2023. So this isn't just one group buying, it's broad demand building across the network. So why people comparing FTX moment? Like, let's be clear, the reason everyone is bringing up FTX is because there was a capitulation moment. People panic sold, weak hands got wiped out, and the market felt completely hopeless. But the moment also ended up being the reset. Bitcoin eventually recovered massively from that low. So when you see accumulation like FTX again, it doesn't mean we are crashing to 15K. It means the market is showing a similar pattern. Big players buying while price is weak and sentiment is bad. That's usually how floors form. And this, of course, it does not guarantee Bitcoin will pump tomorrow, because like as we were doing a TA, daily wise is looking very bearish because like we dropped the hour sign in support, and also it looks like a bear flag forming after all. But like this doesn't just it does suggest something important. When large holders keep buying, it reduces the supply available in the market, and when supply gets tight, Bitcoin becomes easier to move up when demand returns. So if Bitcoin is stuck in a range right now, as we were doing the TA, is kind of between 84K to 94K. Whales accumulation never stop, and it can be the few sitting underneath the market. It's like loading a spring. So not only this, institutions are buying as well, of course, like MicroStrategy. Strategy, the company led by Michael Saylor, recently bought another 13,000 BTC, spending around $1.25 billion. Their total Bitcoin holdings are now worth like 687,000 BTC on the balance sheet. That's one of the biggest corporate Bitcoin positions in the world. So the big players are not leaving. They're actually accumulating non-stop. And just to add the bullishness, some good news that I'm seeing, because there are a lot of scary stuff is happening geopolitically speaking. But okay, there's one good news I spotted. Like this is actually a wild one, because it shows Bitcoin isn't just a Wall Street asset anymore. So, oopsie. So Stick and Shake, the bagger chain, a massive bagger chain in the US, announced they bought $10 million worth of BTC, which is around like 105 BTC. This is a real company with real stores and doing real business. And they have already been accepting Bitcoin payments across the US locations since 2025, including Lightning payments. Now they're putting BTC on the balance sheet as well. That's a different kind of adoption, not a crypto exchange, not a meme coin project, but a burger company. So if you put all these stories together, like mainstream media, like retail business, like whales adopting, there's like the picture has actually become clearer. On one side, big holders are buying like crazy. On the other side, mainstream companies are starting to treat BTC like a real treasury asset. So that combination is what makes Bitcoin harder and harder to kill in the long term. So the key takeaway, I would say, short-term wise, yes, maybe it's going to be a lot more pain, or in the coming weeks, since that we're just like chopping around. The sideways action is extremely boring, not going to lie. Like Bitcoin may look very boring on the chart right now, but the smart money is not bored. Whales are stacking the most since FTX. Even small wallets are buying now, and companies are adding BTC to the treasury. So the next question is, when the market fully flips back to risk on, I'm looking Q3 or perhaps Q4 2026. So how much supply will that even be left to sell? That's what we're tracking next on Roxom TV. Anyways, so that is the last news that I want to share in today's live show. Last call to action before we end this. Make sure to follow us on Twitter. So my own Twitter is gemcrypto_io. Make sure to follow Roxom TV as well, because we have regular updates about the news, not just Bitcoin, but like geopolitics, about AI here. We have Donald Trump. So point being, we are updating very valuable content very constantly. So make sure to give us a follow, because there is so much valuable content you don't want to miss. So it's at Roxom TV. And as for my show is Monday to Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my show live, don't worry. It's also available on YouTube channel. So on my personal YouTube channels, Gemfilm Crypto YouTube channel, and also Roxom TV YouTube channel. Thank you so much for watching, and I'll see you guys in tomorrow's show.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now